The financial system is a debt-based system, meaning new debt, and by extension, new dollars, must continuously be created and put into the system in order to sustain the system from collapsing. New debt, credit creation, or new dollars, if they are not created, the system will collapse on its own weight. It's as simple as that. That's really basic economics with the financial system. And if it collapses in its own weight, we would default, of course, and have even more serious issues. So this isn't speculation. This is economics 101, and it's a fundamental economic reality. This is how the system works. So they always have to expand the debt, and they always have to keep debasing the currency. And that means money printing and credit creation, and that means crypto and asset prices go up. So your question, why haven't we seen altcoin season yet, or an explosive bull run? That brings us to the question that's on everybody's mind. Why haven't we seen that kind of parabolic bull run that people are waiting for, that have been waiting for? The altcoin season that we constantly speak about, or Bitcoin reaching new all-time highs, crypto prices reaching new all-time highs. Why hasn't that happened? The answer is because today's market is driven by liquidity flows, as it always has been. And those flows haven't fully returned to the crypto market yet. While Bitcoin has rallied, of course, and crypto has pumped, leading up to Trump's election, crypto did pump. And the real driver, which is global M2 money supply, the M2 money expansion hasn't even taken place yet. Instead, what we saw so far is a crypto market pumping and pumping based on nothing, just flows from ETF inflows, political positive sentiment, and short-term hype. That's all we saw. And that pumped the market. That's it. But the kind of liquidity event that historically triggers a true altcoin season and bull run hasn't even occurred yet. So logically, be logical. Ask yourself, if crypto has rallied this far without any meaningful increase in what really drives it, which is the global liquidity, which is the main driver that drives bull runs, what do you think happens when the global liquidity actually increases, expands exponentially, and returns and flows its way into the crypto market? What do you think is going to happen? Remember, there's a lag time. It takes time for these things to happen. Exactly. Well, that will be your bull run. But now you're probably thinking, okay, well, why hasn't a substantial increase in liquidity come and entered the market just yet? Why? And I'll explain. Here's how the economy works. Here's what people aren't considering, and I'll explain it simply. The major liquidity injections don't come into the market from the central banks during market strength, okay? They come after economic downturns, recessions, credit events, systematic market stress, or tight financial conditions and weakness in the economy. That's when the money starts coming in from the central banks. Once we have weakness in the economy and it's visible in the economic data, central banks get that weak economic data, and that's when central banks are forced to step in and act and send a recovery and send the markets up. They can't just inject liquidity preemptively, okay? That's not how it works. They have to wait until the conditions in the economy demand it. So you see, the US fiscal landscape has shifted ever since Trump came into office. So with the administration, been publicly saying and aiming and have been doing cutting government spending, we can expect lower employment, which is happening, GDP would draw down, and inflation would draw down. The Fed is basically allowing pressure to ease and come down, and they're setting the stage for them to intervene and come in. But first, they need to see visible weakness in the economy and in the data. And once they step in, stimulus, they print money, risk on assets, especially crypto, will benefit significantly, and you're going to see asset prices soar once again. And I'm very well aware, the economy, the system's collapsing. It's in slow motion, I know, but we're not there yet. When that moment arrives, when central banks worldwide collude together and they pivot towards stimulus and they decide that, okay, this is the next step, they step into the expansion phase. That's when global M2 money supply increases and the cycle begins again. When we see the real movement in crypto markets will be after that happens. So we're still in a bull market as we speak, and the best is actually yet to come. We just need the macro factors to unfold, because it's like a pressure valve they have. You know, they apply the pressure, it gets heated up, they take it off. It cools down, they apply the pressure, and that's how cycles work. The macro factors are the key to unlocking the next phase of the entire crypto cycle. So we have to watch the macro data, and that's what I'm trying to explain. Central banks are watching every data point very closely, okay? They're paying attention to everything. They're waiting for the right moment to step in and stimulate. But right now, liquidity cycles haven't topped out yet, okay? You can see this, anybody can look at it. We're still in the middle or near the bottom. But what exactly is a liquidity cycle anyway? It's basically the creation of available debt and just money printing that fuels and drives the economic expansion in the economy. So banks are obviously incentivized to create debt through government policies and actions, which in turn basically push money through the economy. And this is why we have to look at the macro data and not just the 4-year Bitcoin halving cycle, even though they coincide together. The Bitcoin halving is not enough, okay? The fiscal landscape has shifted because of this new administration here. Now, basically, in simple terms, what they want to do is they're drawing things down. They want the economy to cool off. They want things to pull back, draw down the stock market, suppress optimism, keeping sentiment, negative, uncertain. So people are sitting on the sidelines, investors are waiting, and even cutting government spending is what, Doge is doing and all these characters. So this brings down employment, and when you slow GDP growth down, that temporarily lowers inflation, that creates the perfect setup for basically what comes next. And this will happen this year, so likely. Tax cuts, deregulation of banks, other pro-market policies. But the fact is, these measures, once things cool down, the Fed gets the data, these measures will incentivize credit creation and money printing, okay? This would be the next step, leading to obviously currency debasement, which in turn drives asset prices much higher. So the Fed is deliberately cooling off the economy, easing the pressure, and basically providing themselves with the cover they need so that they can step in and stimulate with heavy firepower. Okay, they need that room. So in other words, think of it like, as I said earlier, a pressure valve. They apply it, the economy starts overheating, central banks ease off the gas to cool things down, and once conditions kind of, get low and kind of float around and get to their desired level, that's when they step back in and apply the pressure again, fueling basically the next leg up of the cycle. And that's basically what we're seeing right now. We're in the stage where they're letting things cool down. The more they draw down the stock market, the more they weaken the economy, the more room they have to come in with more stimulus and heavy firepower, which will, of course, debase the currency and send asset prices back up. So clearly, in simple terms, this is not a bear market. This is not what a bear market is. Just because we're experiencing some corrections, which historically happen 7 to 9 times in a bull run anyway, and some temporary weakness in the stock market, and crypto assets, the way they're behaving right now is completely normal in a bull market anyway. I mean, just look at the data historically.